Hi, this is Kathy Campbell with Coldwell Banker, visiting today with Miles Pitcher, owner of Superior Lending.
Good to be with you
How
again.
are you?
I'm good. Life is good.
We
Thanks.
love visiting with you.
I appreciate the chance.
Miles, this past summer, has helped several of my clients with unique loan needs. They couldn't qualify as a conventional loan or a FHA loan for different reasons. Some were small business owners and their taxes didn't show they made enough income, or I had a senior gentleman whose income was not enough.
Yeah.
And yet, based on their assets, you were able to qualify them for the loan.
Absolutely.
So maybe share with people, because there are other ways to get a loan. than
Yeah.
just-
Sometimes we get stuck in this box of thinking it's either conventional FHA, VA, or USDA loans.
Yeah.
But we have these alternative loans that are fabulous. Very popular right now is what we call a bank statement loan. These are for our self-employed clients who are buying either a primary residence, second home, investment property. We gather in 12 to 24 months of their bank statements. It can be personal or business bank statements. We total up all the deposits, and then we apply a factor or an expense ratio to it.
Okay.
Somewhere 30 to 50%. And then that number is what becomes their income and qualifying for the mortgage.
So we don't even look at the tax returns in
We
that time.
we don't even do. In fact, I have a client right now who is multiple years behind on his taxes, and he's doing a bank statement loan.
And you still could pull that out.
and
Right.
still doing a jumbo bank statement loan to qualify.
That's a real relief to business owners. That's so great.
Yeah.
I also recently had a client call. They've just started a new business 7 months ago.
Yeah.
And they said either they've got to wait for 2 years tax returns, or it was just a year off a bank statement.
Correct.
Could you talk about that one?
Yeah, so typically for the bank statement loans, we're dealing with the self-employed borrowers who have either written off too much on their taxes,
Okay.
so they don't show the income, or they haven't been in business long enough to hit that 2-year mark required by our standard loans.
Okay.
And so great fit for it. They need to be in business for a year. And again, we're just looking at the deposits in the bank statements.
Okay, so great news for small business owners out there. And then you helped a senior gentleman I had.
Yes.
His Social Security income is not high to qualify, yet
Yeah.
his assets that he had deposited in various stocks and other investments was ample to qualify him. Could you talk about that one?
Absolutely. So again, this is another one of our alternative loans. Works great for our seniors that maybe are just collecting in Social Security. They have great assets, brokerage accounts, 401ks, IRAs, and they have those assets. What we can do is we take those assets and we take the value of them. They have to be in, say, like stock accounts or things that could be sold and liquidated.
They can pull it out.
They can pull it
Okay.
out, but we take those and we just divide it by 360, and that is income that we get to count for them in qualifying.
Okay, that's excellent. And maybe another tip, he could have qualified, but he wasn't he would take a withdrawal from his
Yes.
stocks as he needed the funds. And I recall if he would have had that set up regular amount every
Mhm.
month, they could have used it like
Correct.
that too. So there might be some kind of planning that might be beneficial too.
Exactly.
Okay, so for these statement loans, is there any difference in interest rate, or are they the same as like a conventional loan?
Yeah, so there is a slight penalty in the interest rate, but
Okay.
again, I say slight. And a lot of it will depend on credit score and how much down payment the client is using.
Okay.
But if they're around 20% down payment and they have a good credit score, we're talking a quarter to 3/8 worse in interest rate versus a conventional loan.
Okay, so could we just throw a number out there?
Okay?
Just think on your feet. So,
Okay.
$600,000 loan,
Oh,
kind of a
man.
median range.
Yeah.
Put 20% down, so we've got a $480,000 loan.
Yes.
3/8 more interest rate. What would that increase
Yeah.
the payment by?
So yeah, so we're sitting right now around 5.99 in conventional
Okay.
loans. So we're talking a 6.25, 6.375 rate, and you're probably talking, I would guess, $175 to $200 difference in monthly payment.
Okay, so getting a house or not,
Yeah.
that's worth the.
Well, and the other point that we like to show the clients is $150 to $200 extra a month in that monthly payment is sure a lot less than what the income taxes would be if they had to show all the income to qualify on a standard loan.
Excellent point.
And
Okay.
most of our self-employed clients are itemizing on their taxes, therefore that extra that they're paying on that mortgage becomes a tax write-off in their tax returns.
Okay, all right. So anyway, one more method to get a loan if you're an unconventional borrower. Thank you, Miles.
Thank
Appreciate
you. Thank you.
Until next time.